Hello replayers, welcome to the room where we smash pips on a daily basis. Mike, what's up? How are you guys? Welcome to the room. We're gonna talk some Forex pip killing. What's going on, bud? Team Prosper's in the house. What's up, guys? If you guys would like to follow me on Twitter, my handle is @FitBusinessman, as well as all of the other handles. What's going on? We're following up with a daily recap tonight. Kerr, what's up? What's up, Diaz? What's up, guys? Do you do fitness videos? Every once in a while I do some fitness videos. I haven't done anything fitness in a while because right now I'm focusing on the markets. Focusing on Forex because there's just too much opportunity. Yeah, Prodigy is the shit, man. This group never gets old. How it be like? So guys, let's do a quick recap of the day. I just want to show you guys, we got something sick lining up here. I want to show you... This does not happen on a chart too often. I want to show you this because this is funny as hell. This is funny, fun. Check it out. We've got like a quadruple top lining up. What do you notice about this though? Not necessarily. What do you notice about these lows here? What do you notice about the lows? We have an ascending triangle forming here, right? Very, very interesting chart pattern. Exactly. Less and less sellers. And right now, prime is long. We might actually burst through this. So, traditional technical analysis would say, yes, these are candlesticks. This is the Euro-USD exchange. Yep, ascending triangle. And most people would say, no, man, you got like a quadruple, triple top, whatever happening here. But we have the ascending triangle in play, man. And we have it right at this 1400 level. This 1400 level has been the gravitational center of all the price movement for the entire day, even going back to Friday. So there's something magical about this 1400 level. What? I don't know. I don't care, as long as prime just keeps giving me the pips. But I will tell you, it's rare that you see a quadruple top form on any chart like this. And if you want to count this top, you know, here, this is like a quintuple top. So basically what we have, guys, we have international trade coming out at 8:30 a.m. tomorrow morning. 12 pips down. When did you enter? What was your entry? Team Prosper's in the house. I like that name. ISM tomorrow at 10 a.m. So 8:30 and 10 a.m. are the big announcements for tomorrow morning. You guys need to pay attention to those economic reports. A lot of people not in the market right now because they don't want to chance what those reports will say. Then we've got FOMC. We've got FOMC minutes. Look at that, man. 1400 levels. Very active level. Active. How much have you spent on the market? I don't spend anything on the market. Spending indicates that money is flowing out of your account. I don't spend anything. FOMC minutes, 2 p.m. on Wednesday, guys. 2 p.m. on Wednesday. What you're witnessing here, though, this ascending triangle is just likely not necessarily increased, a decrease in sellers, right? It's not necessarily a decrease in sellers. meaning that the price is going to pop up. 38.83. How are you down? 12 pips if you bought at 13.83. Oh. Well, as is likely the case, guys, this 1400 level is just acting as a center of gravity for price movement. A lot of people are deleveraging this week. And we have to start questioning, why are they deleveraging? You know, when you see price movement in between these two fib channels, it's like the price can't get out between the 1400 and 1385. Okay, that's cool. No worries, no worries. Stick with the strategy. Keep watching these periscopes. You'll learn a lot. You'll learn a lot. You'll learn something that will save you at least 6 figures. I promise you that. Now, we have to look at the announcements. We talked about Tuesday. We've got international trade, 8:30 a.m. 10 a.m. ISM. You're welcome. Wednesday, we've got petroleum report, not necessarily a market mover in most cases. However, we've got some news out of Saudi Arabia that they are de-risking. Saudi Arabia is de-risking. They're imposing some type of trade, I guess you would say, taxes on, this is the Euro USD chart, 1 hour Euro USD. I get nervous when Saudi Arabia, a place where people usually drive chrome-plated vehicles, when they start deleveraging, that makes me kind of nervous. FOMC minutes at 2 on Wednesday, and then Thursday, jobless claims, 8:30 a.m. So the mornings from here on out, of course, except Friday, which Friday, a lot of people may have just, taken vacation this entire week, to be honest. Most traders are not going to be moving large lots this week at all because of all these news announcements just being so condensed. True, what's up? Guys, let's get some invites, please. Invites and hearts. Let me see. Let me make sure that I'm not sticking. You guys can hear me and see me okay? Good, good. Awesome, awesome. Appreciate that. I'm going to try and condense the information a little bit more for you guys. Every time I come on at night, I want to make sure that, I do like to hear myself talk, but I want to make sure that we're using time efficiently. Thanks, Jose. Thank you for the invites, guys. Thank you for the hearts. So, we see an ascending triangle here, and we say to ourselves, well, normal charting would say that that's very positive for the price, all right? That's very positive for a jump in price. However, daily is screaming overbought. However, we still could make another move up. Just because the daily chart is overbought does not mean it will not stay overbought. Okay? Let me just try and get this. There we go. Just because daily chart's overbought does not mean that it will not stay overbought. Okay, guys? There's always that saying that says the market can remain irrational longer than you can remain solvent, and it's 100% true. Nobody in this room is throwing enough money at the market to even make it move 1 pip. You guys understand that, right? Every single day in New York City, $5.5 trillion with a T, $5.5 trillion moves through the foreign exchange markets every single day, right through New York City. What does that mean? It means that also simultaneously all the other big cities in the world, the same amount of money flow is occurring, okay? So even though you may have $100 million account, you can't move a single pip, most likely. Think about that. Think about that, right? You have to know where the market's going. There's no movement that you are going to create unless you're a bank throwing a few $1 billion at a certain point. So the idea is that we see all this price movement. We see an ascending triangle. Okay, we see a very basic charting occurring. We see, I don't know what I'm going to call this, a quintuple, at least a quintuple top. Can't say I've ever seen that before, let alone in the currency markets. And what it represents is indecision, deleveraging, people coming out of the market. We see that it's hovering around these fib levels, and the reason why it's doing that is because even though people may not be throwing a lot of force behind algorithms, they're still operating. They're just not operating with a lot of volume. They're not throwing very large lot sizes at any of these points. And that's why today, the only money that was made today was made very early this morning. Okay, it was made early this morning. Right here is 6 a.m. Exactly, deleveraging because they don't want to hold any positions when the news comes up. When the news is going to be announced, I mean, you know, we just got 5 pips right here, but, you know, big whoop-de-doo. Today we took every single one of these trades, long, short, long. I exited positions. We were getting a lot of up and down around here. As you can see, this short only ended up being about 10 pips. There's a lot of indecision here. Whenever you see this sloping price like this, it's kind of like just people selling their long position and taking profits. This is not people actively shorting the market. Okay? An active short in the market looks like this. You see the angle of the price movement? If you were to do what's called a linear regression with this price movement, the angle would be pretty sharp downward. This angle is pretty sharp upward. These are active positions. This is not just taking profits. Like, this move upward is not just people taking profits from the short that occurred here. This is people actively entering and buying positions for speculation up to the upside. Right? That makes sense? So then here we see this fib level comes in hard. When this price hit this fib level and everywhere around here, so here we had guys that were playing the top of the candle that were selling on this candle, right? So the people that were selling on this candle were looking at these highs over here. Both the open and the close of this candle and the body of this candle represented a demarcation between buyers and sellers, where sellers came into the market. So when this candle came up into this area, people just sold out because they knew that there were probably orders around this level, which is 1396, that would come into the market and drive the price down, and sure enough, that's what happened. And Prime caught that move as well. All right? So a lot of people are going to play based on support and resistance. Wolf, what's up? A lot of people are going to play based upon multiple algorithms like I do. No, 88 pips net. So 7 a.m., when 7 a.m. came, we were net long, net short, net long, and we exited right at the 1400 mark, 1400 hours, so about 2:30ish, 3 o'clock, we were out of the market completely because this candle was just all over the place. And, you know, from here downward was very slow, very choppy. So you could have taken a position here. Prime did catch the short. It reversed several times in this area. And when it started reversing several times, I said, I'm just cutting positions and going to the gym. So I didn't really go to the gym until around 4 o'clock, but I got a lot of work done after that because I wasn't watching the charts. Then you see we come back down to this infamous 1385 level. We pop back up to the infamous 1400 level. And so all along, these fib points have been really, really attractive to price, which is obviously the reason why we use fibs. You can use fibs in conjunction with pretty much any other charting technique, and it will enhance your ability to analyze price. And yesterday I talked about why fib levels and support and resistance are very important in the Forex markets, and it's partly because we do not have access to volume as a data source. So we don't know exactly where the volume is coming into the market and out of the market. We cannot test the force of the buying and selling in the market So Forex relies a lot more on historical price levels than, say, equities or any other market. Even though those markets do still rely on price levels, Forex does so to even more of a degree. How much have I made over what period of time? So I have a fiduciary responsibility to investors, so I can't disclose my positions, and I can't disclose the size of my positions or how much I've made in those positions. If you don't understand what that means, it means that when you hold an account for someone else, or when they are attached to your account, meaning they're following your trades, that you cannot specifically say what those trades are. And basically that's my responsibility to them, because a smart player in the market, if they can tell the size of your trades, they can try to reverse engineer your strategies. So obviously, if I have an alpha, I don't want people reverse engineering it. I want to make sure that my strategy stays true for as long as possible. It took me 8 years to get the strategy going, so obviously I'm going to try and get at least twice that out of it. If that makes sense. So at some point, any strategy, lessens in terms of how it delivers gains. But can you explain what tick chart is versus time chart and what helpful info it provide? Sure. Basically, time chart is going to display the candles based upon time intervals, and the tick chart displays the candles based upon ticks. So if you have a 3,000 or a 5,000 tick chart, as soon as 5,000 ticks occur, the next candle appears. As soon as another 5,000 ticks occur, then the next candle appears. Whereas the time interval chart is based upon time intervals. So what information does it display? It's basically that you're paying attention more so to order size and order frequency than time. But both methods work. Some people trade both. Some people use both in analysis. And believe it or not, the crazy thing is that if you line up charts if you have a winning strategy and you play both tick charts and time charts, you'll see that the instances where the shorts and longs line up are almost identical. That's pretty crazy, right? That goes to show you that what economics teaches, like right now, finance courses and economics courses, they teach what's called random walk theory, which is basically a bullshit white paper. What's another way? Classroom based. What's another way I can say about it? I'm just gonna start coming out. Lab coat. Educational, Sally Mae ripoff thinking way of looking at finance. I hope that was enough synonyms, even if I did make some of them up. Exactly. It's an academic point of view. Random walk theory is an academic point of view, and let's face it, some academics can make money in the markets. There's a handful of guys in academia that kill the markets. A handful. But you can count them on one hand. The rest of the guys are just theoretical, never traded a fucking, pip in their life, and yet will teach about markets. That doesn't make sense to me. However, everything they teach, the mathematics, there is one instance where I would say if someone has never touched a stock and is completely academic, that they could still kill it in the markets, and that would be someone that teaches risk management. If someone is very well versed in the mathematics of risk management, you could put that person into any market, and over time they will learn faster than any other person because they understand the probability aspect of risk management. And because of that, they won't ever take large losses. And so they would have that to their advantage if they're in academia and they never really touched the mechanics of the stock market and never seen the price levels or the patterns that emerge. Someone that is well versed in risk management would do very well. which is why you see that most of the people that are entering finance right now come from quantitative analysis backgrounds and mathematical backgrounds as opposed to finance backgrounds. Because it's easier to teach a math geek finance than it is to teach a finance geek math. Does that make sense? Hope that makes sense. But it's the truth. It's the truth. If you're going to pay for a degree right now, and this is a little bit of an aside, I hope that it's in something that's very math-based or statistical, whatever you guys are taking right now, because everything else does not have the return. It's always risk versus return. Always. It's always risk versus return. And so a lot of people, you know how many people ask me, do you think college is worth it? Do you think college is worth it? Well, if you're going to get an art degree, fuck no. College is not worth it. All right? You're just going to be paying money. I mean, you're getting sold a $500 car for $500,000 if that's going to be your choice for a degree. That's essentially what's happening. You take the cost of college and amortize it over the friggin' 25 years that it's going to cost you to pay it off. You know, what they should do is every single student who signs a loan, they should have it on paper exactly how much that person is paying over the 35 years, down to the cent, before they ask them. It should be right above the place where they sign their name for that loan. Because if they did that, most people would not go to college. Okay? And most people would think twice about going to college for something that has a definite return and that has real skills. So that's my little aside right there. But it's very obvious. You know, part of what I wanted to show you guys tonight, and I'm just going to give you guys a quick review of what we did for the day. So basically, we took 40 pips to the upside. Really quick review. 40 pips to the upside. We did 23 pips downside, 20 pips upside, and then we did like a 5 pip short here, and then I just got out. So that was the 88 pips for you accounting majors out there. For those of you that are not accounting majors and like economics, I'm about to go on an economic rant, so you might want to record this. So basically, there's a news article on Bloomberg right now that talks about literally what I've been talking about for the last week in terms of deleveraging by global economies, currency wars, trade wars, and why the Forex markets are screaming with opportunity. Because it's about to get volatile, folks. Thank you for the hearts, guys. When I see hearts like that, you guys are just like buying me a cup of coffee or a beer every single heart. It feels that good. So let's just look at something really quick. I want you to read this headline and tell me if it doesn't make sense. Okay. Alright, for some reason the RAM on my computer is starving. Okay. Biggest ever Saudi overhaul targets $100 billion of revenue. Now, I want you to keep in mind market mechanics. The oil that is coming out of the Middle East, of course, commodities suffered a lot this past year. This past year, commodities got slaughtered. Okay? Now, why is that important for the currency markets? You got to understand that most commodities are bought with certain currencies. Specifically, USD is the major currency that oil is bought with around the world. Okay? So keep that in the back of your mind while I tell you what I'm about to tell you. When you think of oil, you should think of USD. Okay? Tom Keene trying to come onto my Periscope. Unnoted. Not yet, Tom, not yet. So, we have this headline. It doesn't make sense because when I think of Saudi Arabia, I think of oil tycoons making hundreds of billions of dollars. And this says they're going to target $100 billion of revenue. Well, who are they going to target it from, right? Well, obviously, people within their country. But look at what they're going to levy. if you leave the country, they're going to levy some type of tax against you. If you use energy, which of course is everybody, if you buy luxury goods, or if you buy sugary drinks. Hey, you think this one would ever get passed in the U.S.? If you buy a sugary drink, we're going to levy the cost of your health care against the purchase of your sugary drink. Too bad that would never happen in the U.S., right? We need it, though. It's the only thing that's going to save health, to be quite honest. Can you guys hear me okay? So, now, the plan is to boost non-oil revenue to balance the budget. Okay, first of all, whenever you hear a country trying to balance the budget, it means that they're not going to balance the budget. It's a catchphrase, okay? Countries do not balance budgets because they always spend more than the budget, and they always spend more than the budget because debt is always increasing faster than the currency supply. So there never will be a country that balances the budget, ever. It doesn't happen. It's a catchphrase. It's a lie. It makes people say, hey, yeah, they're going to balance the budget. And then a bunch of, political supporters jump on, this one guy because he says he's going to balance the budget. It would never happen in any country at any time because economics do not support balancing of budgets. It's just the way it is. Sound went out. Crap. Did I have my finger over the sound? I've been doing that a lot lately. Let me put this down. Hold on. Let me put this down. Let me prop this up. I'm going to find a way to rig this up. Okay. Fine now. Okay. So, what I was talking about, not these ads. So, but the balancing of the budget is just a catchphrase. There will never be a balancing of the budget. Yeah, we can do Q&A at the end. There's never going to be a balancing of the budget. But what I want you to keep in mind is that I don't know what is happening here. My computer's having a mind of its own. So I'm just going to talk. What I want you to keep in mind is one very important thing. What the hell is happening to my computer? I don't know. Maybe I've got a virus. The very important thing is that commodity prices do influence currency prices. Okay? There are a lot of people that take trades, either one side or the other, based upon some sort of carry, and they're going to try and invest that in multiple things, whether it's currencies or what have you. Now, certain currencies, and this is important to note, certain currencies serve as pegs for pricing of other currencies. For instance, the USD is the peg for, or was the peg for the yuan.
That's why I use
this thing is pissing me off right now.
Prices, so it suits my mobile lifestyle, and it keeps my investments fully mobile, even when I'm on the move.
So the bottom line is that when we look at a headline like this, that Saudi Arabia is deleveraging, we have to think, why are they deleveraging, right? Saudi Arabia is supposed to be so oil rich, and oil, let me tell you guys, oil and natural gas throw off huge amounts of cash flow. Huge amounts of cash flow, because the contracts that people have to transport the oil or to take the oil out, it's like a monthly contract. You just get money over and over and over every single month. There's lots of royalties that are sold, in the energy world. So when a country that has a lot of cash flow is having issues and they have to start levying, sugary drinks to actually make money for the government, it's not a good thing. It's really not a good thing, because it just illustrates how cash-strapped countries are right now. And if the countries are cash-strapped, just imagine how the individual companies within the country are. Right? And so what does this come back to? It comes back to a hat tip of currency wars. Because what do you think is going to happen after Saudi Arabia doesn't get enough money from the people? What's going to be their next card to play. Their next card to play is that they're going to have to engage in trade wars, and they're going to have to start being mean to their trade partners to actually get money, because they're not going to be able to get it from so-called taxation or levies, right? Oh, I know why my computer was freezing, because it's doing a security scan right now. So what those articles do, and if you keep track of the articles from this point forward, specifically, for a lot of Asian currencies, all right? So the yuan used to be pegged. Now they've changed it. Now they're going to supposedly do a basket of currencies to peg it to. And so essentially what you have is one currency is always influencing another. I want to find this article again. Hang with me here. I just want to find this Saudi Arabia article. Alright, they probably moved it off the front page. But we want to start really paying attention to articles that somehow indicate that a country is having difficulty either paying bonds or paying debt. And that's what that article essentially says, because Saudi Arabia would not have to raise money unless they were having trouble paying debt. We're talking about what kind of debt? We're talking about national debt, right? So we're talking about national debt. And how is the national debt formed? It's formed because, believe it or not, every country is on loan. They get their currencies on loan from the central bank of that country. How crazy is that, right? So the U.S., every time the U.S. prints money, the Federal Reserve is actually loaning at a very small interest rate that money to the nation. And they sit back and they collect interest on the money they print out of thin air. What I'm telling you is not a lie. It's pretty crazy. It's absolutely insanity. It's absolute insanity to think that people can make money, right, fiat currency, absolutely. People can make money off of fictitious currency. And so that's the economics of it. When you see a country having difficulty paying that interest, they're going to go and try and raise taxes and try and have some type of levy, and they're going to try and get money from the so-called people, right? So they're basically seeing the people as worker ants. And they believe, that country believes, that they're somehow the leader of the hive. But the real leader of the hive is, of course, the central bank, because the central bank is the one that's making money off of doing nothing. They created a system that enables them to do that. It goes to show you the power of systems, right? Systems are powerful because they work even when you don't. Now, if we take this down to the level of we start asking, yes, in very much a way, that is truth. In very much a way, that is truth. And it's crazy when you think about it. But people don't have enough knowledge about economics to see it that way. And the thing is that anybody who knows anything about economics either supports it or does not. There's no, educated people do not lie in the gray area. They really don't. They're either going to support that process or completely be against it. So what was remember I told you guys a week and a half ago that BlackRock was firing 400 people? Now, why does that news article stand out to me? I'll see if I can find it. I'll just see if I can find it. Do you guys remember me telling you that? Remember I said that BlackRock was firing 400 people like a week and a half ago? Gotcha. Let's see if I can find it. It should be almost right at the top. This only happened like a week ago. Right there. You see the article? BlackRock plans to cut 400 jobs in coming weeks. So what you have to do if you're going to become a great trader in any market is you have to have this internal barometer. When you see a headline like this, your mind has to automatically start assembling the points between articles. Okay, so we have BlackRock firing 400 people. BlackRock is a great financial institution. They do a lot of business. They do mergers and acquisitions. They own real estate. They do every type of finance. They've got their hands in every type of finance you can imagine. And they're cutting 400 jobs. You know, who knows? Maybe BlackRock bought my algorithm and they said, hey, we don't need these 400 people to trade. We can just use Jay's algorithm and get rid of these 400 people, in which case I would have mixed feelings because obviously I don't want 400 jobs to be cut, but it would be a nice payday. Now, maybe something that like that occurred. Maybe they did come out with some system that just made a lot of those jobs irrelevant. But the fact of the matter is that if you have 400 very intelligent people in finance and you can't find a way for those 400 people to bring you a net return, and you're one of the biggest financial institutions in the world, that's a problem. That's a problem. You're one of the biggest financial institutions in the world, and you're going to cut 400 very educated people in finance because you can't find them a way to make a return in any of your income streams. Think about that from a business perspective. Then the next line we draw is to the Saudi Arabia article. Saudi Arabia is also... What is cutting jobs, guys? Cutting jobs is deleveraging. Cutting jobs is deleveraging because it's saving them income. They don't have to pay out money to workers, right? So in a way that when they cut jobs, it's an act of deleveraging, just as a trader would deleverage. When risk gets high, traders deleverage. So what does that also tell you about their forecasts? If they come out with any positive forecast going forward, you know they're full of shit. Right? Because if you had a positive forecast and then you're cutting 400 people from your workforce, well, that's not really, leading by action, is it? Right? So we look at this and we start forming these webs of significance, and we start really connecting the dots and seeing that there's little indications based upon the news headlines that risk is drastically increasing in the market. And that's going to be what brings the currency volatility, because all of these companies that cut jobs and the countries that need to get extra funding by taxing, it's going to show up in currencies at some way, shape, or form. You're going to see, Greece is going to have another meltdown. And what's that going to do to the price of the euro? I can guarantee you it's going to do something. I can't make the call up or down, but I will tell you that it will affect the euro, and probably a big way. And I'll be riding Prime's coattails when it happens. So when we look at these headlines, that's the only thing that I want to get across to you guys tonight, is that if you just keep like an Excel spreadsheet and you just start pasting all of the news topics on a certain company or a certain country, and you start just accumulating those news stories, right? What you're going to find is that a pattern emerges, and you're going to start seeing a little bit of opportunity emerging. You're going to start seeing that right now risk is increasing, and the only way for companies and countries to de-risk is by having some type of recession, unfortunately. So, although I'm not a political person, if you notice that Trump just announced that he sees recession. Part of having a big real estate company is that you get to see exactly how easy it is to get money for real estate development, which is a huge chunk of the economy. And so when you see anyone who is very high in real estate, Sam Zell has done it multiple times. Anybody who is really high up in real estate, if they make a call, you really want to pay attention to it, regardless of how you feel about them personally, because they tend to give the hat tip. They just tend to kind of give you a peek at what's happening. You don't know why they're making that call, but it's a good way to kind of judge risk in the market. So we have Trump saying there's going to be a recession. We have BlackRock cutting 400 jobs in a matter of weeks. Okay? Now, I don't know what these people did at BlackRock, but I can promise you that getting a job at Chipotle is not going to be 10% of their income. If they get 2 jobs, one at Chipotle and one at DSW, it's not going to be 25% of their income. And so you see how the numbers are gamed with when it comes to job reports. And we have a jobless claim report coming out on Thursday, April 7th. The jobless claims are coming out at 8:30 a.m. And to be honest, it doesn't matter what the report is, because BlackRock is giving us the hat tip. And if we want to go onto Google and really just kind of drill down and see, well, how many of these type news articles, we could just copy and paste this phrase right here, cut about 400 jobs, right? So if we just do cut about 400 jobs, if we copy this and paste it into Google and do a search, it's going to give us all of the news stories that have this type of phrase or similar to this type of phrase. And we will be able to see exactly what the risk is in the market based upon how many news articles are coming out like this. Because most big companies, they release this report as a way of kind of easing the pain for their employees. Like, oh, by the way, we're going to be cutting jobs in a few weeks. And so you can bet that all of these top employees are already on the phone with recruiters trying to line up other jobs already, like right now. So it just gives you an idea of the risk that is increasing in the market, and we keep that in the back of our head with every single trade. Okay, risk is technically increasing. We've got several news stories saying that. I've got to keep that in the back of my mind as I trade. Okay? Because when the risk increases, it opens up the door to these huge standard deviation moves. Okay? What do I mean by that? Huge standard deviation moves? That's a huge standard deviation move. Remember I told you guys that 1377 level, once we hit that, go short, boom, look at that big candle. Look at the size of that candle, and then the one next to it. Now I don't know how many standard deviations that is. I could look it up on my chart and it would tell me. But the point is that these are the moves we try to catch, because these are the moves that can make your whole week. You can make a whole week of income just with these moves if you can pinpoint these moves. And we're likely to have another one of these moves. All right? Right now, the market is kind of just dilly-dallying. But this is only because we have a lot of people deleveraging, because they too sense that there's risk in the market. Now, who knows? Who knows? The risk may be that some bank is going to go out of business, or some bank is, the CEO is going to change, or something like that. We don't know what the risk is. All we know is that it's priced, right? It's priced into the market. Most likely, there will be a hat tip. Someone is going to produce some type of price movement. Prime will pick up the price movement before the move occurs, all right? So before these huge candles occurred, you see over here that there were several larger candles. The hat tip, though, Prime went short right at 14.15, right around here. I remember this level. And so right here we could have been short the whole way. But if you remember me telling you, this was like immediately after the non-farm payroll report, right? This was immediately after. And so this moved downward. I said, don't be in the market. And as soon as 1377 hit, we were in the market short. Boom. Then while I was on the scope with you guys, this long occurred. These were both very nice candles. So to give you an idea, the range on these candles, the high to low, is 50 pips. 50 pips down, 50 pips up. And this occurred in 2 hours. So you could have made 100 pips in 2 hours. Anyways, guys. Dwayne, what's up? Our analysis for tonight, pay attention to the news articles. Pay attention to the risk that's in the market. Pay attention to all that stuff. The recap for the day, 88 pips up. What's up? What's up? Glad to hear. I'm actually hopping off right now, but I wanted to make sure that I told you guys everything that I had on my mind tonight, which was the two things, the recap for the day, and then also pay attention to news stories, because the news stories hint at risk, hidden risk in the markets. The news stories, if you piece them together, they will show you that there's either more risk or less risk in the market. Okay? Awesome, awesome. I appreciate all the invites, Dwayne. Really appreciate that, and the shares. And guys, reach out to me on Twitter. I'm just gonna leave you guys with my all of my social networks. If you guys want to reach out to me, I'm usually online every night, and then multiple times throughout the day. Believe it or not. So you can reach out to me on social. If you're gonna direct message me, or not direct message me, but at me on Twitter, you can use hashtag FXPrime or hashtag PitKillers, either one. And I'm fairly active on all these social networks, but I'm the most active on Twitter, Instagram, and Periscope. All right. I'm starting to get into Snapchat some more. I think I'm gonna pop on Snapchat and give a few heads up about when I am actually gonna go on to Periscope. Thank you for the hearts, guys. Appreciate those hearts. Appreciate the love. Appreciate the shares. And so what's our play for tomorrow? Guys, we are not going to stay long. You should have no long positions overnight. Tomorrow morning is international trade at 8:30, and then ISM at 10 a.m. So we're likely to have some nice volatility in the morning. I'm going to wake up early and play it. If I wake up early enough, I'm going to scope as soon as I wake up at like 6 a.m. I'm going to hope to really get everything going. Wake up at 5 a.m. and get everything going by 6 a.m. So this way I can show you guys as the morning volatility occurs exactly how Prime is taking those trades, all right? All right, guys, you have a great night. Keep the study up and stay tenacious. Cool, Dwayne. 6 a.m. Eastern, all right? True, I'm about to hop off. So I will see you guys in the morning. There's likely to be some very nice volatility heading into the 8:30 a.m. International Trade Report and the 10 a.m. ISM. We'll see how that affects the Euro-USD cross. All right, I'm guessing that we're going to have some very nice volatility. Not sure which direction, but that's why I let FX Prime take control of that aspect of it. We do non-emotional trading based on the algorithm. Okay, guys? You guys have a great night. I'll catch you tomorrow.